2020. Detonation coming to you all this way. And this episode of Detonation is brought to you by Thrivus. Thrivus is the human enhancement company that is giving exponential gifts to Detonation fans. Each gift starts at $5 and increases exponentially to $160 based on the number of fans that share this episode of Detonation within 24 hours. So if you want to get your hands on some Thrivus, better do that within the 24 hours. Check out the rules at the bottom of the description of this episode of Detonation on this YouTube channel. The last exponential gift was $10. That was to Mike DeVerde, who is now a patron sponsor of the show. So thank you very much, Mike DeVerde. We have a really interesting episode of Detonation coming up for you here today, all the way from Russia. Sir? Ukraine, sorry, yeah. Sorry, it's from the Ukraine. It's Stobox. Stobox provides a full range of services to help companies issue digital securities and attract capital from large pool of non-institutional investors, including legal structuring, technical setup, and marketing campaign. Stobox builds a platform for insurance and secondary OTC trading of digital security. The platform that is fully compliant with EU securities and financial regulations. It's to do with blockchain technology. Borys, you wanna introduce yourself? You have a unique combination of deep analytical mastermind and an extraordinary communicator. You have an extensive knowledge of the blockchain, both as technology and as a business solution. And you have a background of 3 years in complex theoretical physics. Also, you're a talented public speaker, Ukrainian national debate champion. It's lovely to have you on Detonation, and thanks for staying up so late at night. It's fantastic to have you on the show. We love blockchain here. Let's talk blockchain.
Thank you, Steve. I'm glad to be here as well. Could you please repeat your question?
So, just introduce yourself to the audience and explain what it is that Stobox does.
Okay, my name is Borys. I am Analytics Director at Stobox, working on all business analytics director, working on all questions regarding to strategy, to how the platform and technical solution should be structured, how to structure the offering of securities for our clients, and things like that. So, what we do, we are a provider of, first of all, technical solutions, but not only, in the new generation of fintech. The first generation of fintech, that is financial technology, was more about payment solutions and electronic money institutions. And in the last few years, many other solutions and areas emerged, such as, for example, RegTech, regulatory technology that facilitates compliance to companies, and also many solutions in capital markets that help companies raise capital, manage their cap table, and other solutions. So the blockchain is basically a database in which you can store in a secure and cryptographic way and manage more efficiently any information units. In cryptocurrencies, blockchain is used to store payment units, that is, tokens which you can use to pay for something. But blockchain can also be used for more complicated financial instruments, such as securities or units in investment funds. And that is something we do. A platform, a technology in which a company can issue its securities, shares in a company, or debt securities, or other type of instruments, in order to offer it to multiple investors in various countries, and to manage this investor, manage the relationship with them, to use it to pay dividends and other corporate actions and corporate governance things. The main benefit of blockchain-based, or as we say, DLT-based, distributed ledger technology, securities, is that for smaller companies that cannot afford themselves a fundraising in an exchange, because according to PwC statistics, making an IPO on a major exchange, a small IPO, costs on average $7.3 million, which is not not an option for small and medium enterprises and startups and even a bit bigger companies. So they mostly opt out for debt financing, which they not always can obtain, or the private equity, which is problematic because for private equity, venture capital is accessible for startups, which can show multiples, that is to grow 10 times or 100 times. But for operational businesses who want to expand their operations for project financing, venture capital is not accessible, only private equity. But the problem with private equity is that the way they function is that they mostly take control over the business, which means that these enterprises face a very tough time. It is either to use private equity financing and give away much of the control over the business the founders have built, or to use debt financing, which can be often very expensive. So what we offer and what companies like us offer is a platform, a technology for this business to offer its securities to a larger audience of individual investors, because this project can be often very good. They can offer even double-digit returns, which in the economy of negative interest rates is negative yields for banking deposits is very nice. But in status quo, individual investors mostly lack access to these projects, because for a small enterprise, for an even medium-sized enterprise, manage hundreds or even thousands of smaller investors is very complicated, because it's a lot of paperwork if the securities are accounted in a paper-based form, which they just cannot afford, and cannot afford the mistakes which will definitely happen. And if the infrastructure for these securities is digital and not paper-based and uses advanced cryptography, you can manage it using IT infrastructure, using built-in functionality, and you are safe from possible mistakes. This is what they get. The same refers to investment funds as well, which can now onboard smaller issuers. One of interesting clients we are communicated with is a venture fund. Currently, the minimum check for their investors is $5 million, and they're mostly targeted at family offices. And we're communicated on how we can reduce the entry threshold for investors to $50,000 to even to $1,000, which is huge reduction. This is the main benefit we bring. But there are other interesting things we encounter is that, considering that this is quite a new option and a few companies understand how to structure such offering, what we encounter is that what clients need is not only a tech infrastructure, which we focus on primarily, but a complete solution. Answer to the question not how do I get a tech, but how do I raise capital, which means answer to the question which jurisdiction do I choose for structuring my offering, which regulation to which investors I offer, how do I reach these investors as no one did this before. And the problem is that traditional professional service providers are not always able to offer these answers. So who are these providers that companies can use? First of all, lawyers, which are often used, which can offer answer to questions about jurisdictions and other. There are several problems associated with that. The first is the fact that legal firms mostly cover only their own jurisdiction and regulation only in their country, not answering the question on how do you choose which jurisdiction actually suits you best. Is this Cayman Islands or Switzerland or Estonia? Furthermore, it requires holistic view. So, for example, Cayman Islands may be cheaper in terms of regulation and structuring and compliance reporting, but on the other hand, due to reduced legal protection to investors, it may require higher marketing expenses, unless the company has something that ensures high reputation and trust to the offering. And choice of jurisdiction and structuring requires such a holistic view of the company. And the last problem with, if we speak about legal providers, is the fact that they are often overly expensive. It's just unreasonable. We had a sad experience working with tier 1 legal firm on Malta when we considered getting our licenses before, and we paid probably €2,500 for legal advice and get information which I could Google and compile in a few hours, maybe in 2 days, and we waited probably a month for that. And this is a tier 1 firm, so definitely it is unreasonable. And it refers definitely to the fact that financial markets historically have been very elite industry in which credentials and things matter. And fintech now brings democratization to this market in terms of opening investment opportunities to smaller investors, in terms of opening access to capital to smaller companies. But the democratization of that market is not only about technology, but also about democratization of knowledge and desacralization of knowledge, which previously was possessed only by a few professional service providers with specialized education, which could have been accessed only through years of study in university. But despite the fact that I don't have legal degree, it's actually theoretical physics degree, when I understood that we need this and we need answer, and no one, not any other provider we could talk to, understand what our technology is better than me, I just said I spent probably a month on just going through all the legislation, regulatory requirements as well, and I said that actually the license which they suggested to us was wrong, and we need something simpler due to the specifics of the technology. So for this reason, because we wasted a lot of time and a lot of money on advice we didn't actually need, or which was the cost of which was unreasonable, because we paid not for the actual knowledge, but for the fact that these people have a PhD degree in law, which isn't something we need. We need the knowledge. So we understood that we should provide not only tax service to our clients, but also a consulting service on how would you structure your offering, what suits you best. And even if offering digital securities at this point is not an option for you, for example, the project would not be attractive enough, or it needs finance quicker than the actual offering can afford, you would spend less time and less funds for getting that advice, instead of going through lawyers which won't tell you that you don't need the offering, because this is actually what they are paid for.
Yeah.
Another problem here is the problem of marketing, because traditional offerings of securities, IPOs, the one who organizes the offering is an underwriting company and investment banks, and spending on underwriting is one of the most expensive parts of the offering. This is the reason why they cost so much. I don't remember the statistic for a small offering, but for the biggest offering, where the average price is 70 millions, the price of underwriting goes to $60 million, almost all the spending. So one of the big reasons why the offering of digital securities not through a traditional exchange is cheaper is the fact that it does not involve underwriting and investment banks. But that also means that you don't have an entity that organizes that offering and that helps you to find investors which previously investment banks did. So at this point, many issuers of digital securities are using the methods of ICO marketing, initial coin offering. The problem is that many so-called ICOs
85% of them were scams targeted and non-sophisticated investors looking for 1,000% returns per day. And if you're a decent project targeting just modern common millennial investors looking for returns better than 3 or 5%, you need other instruments, and there are not enough providers that offer you that, which is also problematic, which is something we desire to help clients with. In order to do this at the first stage, we analyzed quite, not all, but large amount of offerings that already happened. There are approximately 70 which are in the public field, in order to see how did they structure themselves in different jurisdictions, how did they do marketing, what did they do good and well. We will be issuing reports about some of them and about jurisdictions throughout time. Probably in a week or two, we will issue a report about legislation in Cayman Islands and these projects that were there. We also issue some other information in the public field, such as monthly digest, which can be accessed through our website, stobox.io, which summarizes the main trends and news in the industry and breaks them down. So we believe that democratization of knowledge is good, and we should share it with other people in the industry. And the money will come anyway, because if you possess the expertise and if you offer a fair value for it, you can find the clients and you can offer it. So we are currently at the stage of tasting the demand and communicating with some of the clients at this point. So this is in not towards what we do, the technical infrastructure for offering of securities and for fundraising, and the service of facilitating additional things that are needed for such fundraising. Definitely digital securities and the blockchain infrastructure for them has other benefits except fundraising for small and medium enterprises. This is what I mentioned before, and facilitated administration of securities, so that you could just come in your application, click the button, pay dividends, and they are distributed to all of the investors. But this is a functionality to be built in the future, which can be used for large public companies as well. There are many other interesting applications, such as hard coding the compliance rules and into the asset themselves. So for example, if the agreement of private company or limited company says that you cannot sell your holdings before you offer to third parties, before you offer it to existing shareholders, so that on the technical level you couldn't sell them to other people before offering. There are many interesting use cases, but the first one, and which is most popular currently in this space, is fundraising. So this is something we focus on now at this point, and in the future more interesting functionality could be added. So this is very exciting space.
It is an exciting space, and it's really interesting to see companies like yours growing up in and around the arena. I've been talking about blockchain for years and Bitcoin primarily, not so much ICOs. I'm not so much interested in ICOs. I think I've got shows here about Bitcoin specifically as a cryptocurrency and how I'm interested in Bitcoin, BitGold arguably as well, Roger Ver. And blockchain. Blockchain is the big technology. That's the revolutionary technology. You could put a lot of things other than currency or digital coins onto a blockchain, because you could put the whole patent system or the legal system or democracy or governance. You can shift the whole network onto a blockchain, and this is another reason why we support Benzion 2020 here on Debt Nation, because we're talking about e-governance and a lot, and this democratization stuff. But what you're talking about is also really, really important in the financial space. Moving over into the financial space to allow ease of transmission, ease of access. So is Stobox, is this open to just Ukrainians, or is this an international endeavor, or what?
It's an international company, so we are at this point we're incorporated in Estonia. We're getting licenses where the regulation and competent authorities are much more friendly to such businesses and to licenses. In Ukraine there is our back office in which there is an analytics team, our technical team. We are working with local technical. In Ukraine there is very strong IT industry. We are working with local providers of blockchain, distributed lab. They come from academic circles, from studies of cryptography and things like that. So they develop their blockchain solution, a so-called private blockchain, which can be used for accounting of different kinds of instruments. And we are optimizing it for specifically securities and financial instruments.
Yeah, cryptography techniques. It's always been an extremely interesting arena, and it's only getting more interesting. But yeah, it's so interesting that there is that democratization of everything based in the cryptographic nature, where all the computers must verify the transaction. This is different to the current banking system, where it's all done on balance sheets and it's all done on hearsay. What about interbanking, interlending mechanisms? Are you guys involved with that? Are you guys involved with exchanges between entities, or you just want to fix up the infrastructure between the investors and the firms?
At this point, especially considering that the project is on emerging stage, we are focused solely on securities and financial instruments. Definitely, it is in the future, it is necessary to build an ecosystem where all capital and kinds of capital are represented by similar, from technological standpoint, digital units that can flow freely, but based on predetermined cryptographic rules. Definitely, it will take a lot of time for this to be ready to be fully realized. So, for example, considering that there is enormous amount of these rules and regulation, you cannot, at least at this point, completely get rid of human factor. You still need administrators and compliance officers that would check the transactions. You still need the so-called private blockchain. That is, you cannot give a node and allow validation of transaction to any party, to any person sitting in Brazil, in China, in India, in South Africa, because the regulator will ask you, okay, if I want to enforce, for example, a court decision made here in Estonia, how would I make people validators of the network in South Africa to enforce the decision of that court? You need to have a single or a limited number of certain operators who can be enforced through courts. So, in theory, decentralized governance and e-voting of such systems and embedding all rules into cryptography is possible. But on practice, it is questionable how many years or how many decades it will take to happen. But even though the future is uncertain, so we don't know yet will it truly be decentralized, the benefits of cost reduction, of reduced operational expenses, and thus greater access can be done even now when the infrastructure is more centralized than many people would desire it to be.
Does Stobox operate in digital investments only, so cryptocurrencies? Do you accept fiat as well, or do you only operate in fiat? Or what if for example, if I was going to pay you today to fundraise for a company, would you accept my Aussie dollar, or do you only want cryptos?
Actually, we are first of all focused on fiat currencies. and cryptocurrencies additional, because from considering that the space of financial instruments is extremely highly regulated, high anti-money laundering procedures, it is just more simple to work with banks and payment institutions. A bit more expensive, true, but more, but less risky from a money laundering point of view. But accepting cryptocurrencies is possible as well. One way to do it is to here in Estonia get a crypto exchange license in which we could exchange, or partner with crypto exchange in which you could exchange cryptocurrencies sent by clients to the fiat, which we could use for the client's fundraising. But for that, AML service which checks which checks where this Bitcoin or Ethereum came from is needed. As far as we know, there are already such solutions, and we are researching them to find out if they do satisfy the requirements and if we can use them, so that regulators are satisfied. But actually, in the US, for example, many businesses accept cryptocurrencies. In Germany, banks are starting to open accounts in cryptocurrency. So even though it is not clear if the cryptocurrencies will be relevant in a few years, when banks will issue common fiat currencies as cryptocurrencies. Now and in the few years, they become more regulated. The European legislation, so-called Anti-Money Laundering Directive 5, creates a framework which requires all providers of services related to cryptocurrencies to identify their clients. So they are becoming more regulated and more secure means of payment, and definitely this allows us to accept cryptocurrency with lesser risk.
You know, the cryptocurrency revolution is this Austrian school of economics idea, competing currencies smashing together and all competing against each other, private currencies versus fiat currencies. You know, we're at a time of record low interest rates, which means that capital rich countries, capital poor countries, all countries are looking for any return on yield because they can't run to the central bank, they can't run to a bank because there's no yield, there's no interest rate there to just have a safe return. So do you think that the amount of money being pumped into cryptos is a side effect of these low interest rates, and that, you know, maybe crypto is in a bubble because of that? Or do you see this as a longer term trend where you know, where it's a paradigm shift in money, and the crypto revolution is only going to continue to rise even after interest rates come back up to a normal level?
I believe you cannot attribute the rise of cryptocurrencies to a single factor, because it is true that blockchain-based infrastructure is more efficient, and that is the reason why central banks in many major economies, the European Central Bank, the Chinese Central Bank, are issuing fiat currencies on the blockchain. So there is definitely an intrinsic value in cryptocurrencies as a means of payment. However, that is the first point. Second point, cryptocurrencies are not an investment vehicle. So you cannot really put your money in a cryptocurrency as well as you put it in a company that brings you that brings you some returns. Because the reason why you get return on investment in a company or in some vehicle is the fact that your money is used in a productive way to create something. But when you put your money into Bitcoin, it isn't used as a creative means. It doesn't distribute profits to you because there are no profits. So investment in cryptocurrencies is purely speculative. And although it is true that some investment in cryptocurrencies came from some value of cryptocurrencies is based on the expectations of them rising in value, which is purely speculative. But the problem of, but they also have an intrinsic value, and it's hard to distinguish in the practical level between that. Some cryptocurrencies, such as Ethereum, have value not only speculative, but also based on the fact that they are native value of the blockchain that has multiple use cases. And basically, as for any asset without for any unit that does not represent an underlying asset that has value, the price of the asset is mostly based on expectations, on narratives, on beliefs about will the banks, will the current financial system allow for such asset to be used, and will they remain relevant? My personal point of view is that although some of the cryptocurrencies will remain used, such as Bitcoin, Ethereum, and a few others that either have native blockchains or have a story and narrative associated with them, central bank digital currencies, which use the same technology but are backed by the reputation of banks, will be mostly used by people for facilitated cross-border transactions, which are main benefit of cryptocurrencies.
Yeah, that's really interesting. Yeah, Stobox is a really interesting company. You know, do you struggle? You know, there's legal bills, the EU. You know, you're all over the world. Do you find you have to spend much of your money on legal fees and legal infrastructure fees? Are the governments putting up a fight in that arena, or is it becoming less and less, or what's going on your legal side? I'm very interested to find out. Do you have to invest much into legal fees?
Not more than any company working in the financial sector, in the investment sector, because considering the fact that when you work with money and when you provide money or investment related services, temptation to commit some kind of fraud is really high. And committing the fraud is easy because you just need to erase some values on your computer, just clever accounting. Considering these facts, high regulation of these markets is highly necessary and justified. And although we do spend some amount of our funds on legal fees, on licenses are one of the reasons why going operational is delayed. We will need probably from 3 to 6 months to get everything we need. We spent much of my personal time on analyzing legislation, legal requirements for technology as well. We believe it is fine. It is how it should be, because any financial technology, financial infrastructure should be regulated. And probably the compliant landscape will change. Just a few days ago, we published an article on the top media in the digital security space, the Tokenist, on how the DLT, distributed ledger technology, will change the compliance landscape. One of the interesting thoughts from there is the fact that if the rules are embedded into technology, then regulators should care about licensing the technology, and if the rules are embedded in the correct way, if they aren't backdoors or IT security holes. And probably in the future we'll see more demand for people which combine legal and tech expertise, which can conduct a systems audit, and licensing for investment service provider, for financial institution will come to licensing their IT infrastructure as well, because it will be critical element which defines if the business is compliant.
You work with securities tokens, and I'm wondering if you work with apps on mobile phones, if you've got mobile phone companies that are approaching you for assistance. Does that happen much? Because there's a huge market in tokenization of mobile phone apps. Do you find that's a big market?
Tokenization is a word which is used in many which has different meanings in different industries. So tokenization is a cryptographic term, and tokenization in mobile apps is highly different from, or not different in cryptographic sense, but on practical level is different from tokenization in the security space. So in mobile apps, I'm not sure if I'm right, because I don't know much about this specific market and how it's used there. But as far as I understand, tokenization there is used mostly in probably loyalty programs, in points that are represented by tokens or things like that. And although the infrastructure may be used for that as well, in financial sector you got many more rules, because there aren't many legal requirements to loyalty points. You can freely exchange them, and they are not securities, not an investment vehicle. So it would be unreasonable for such companies to approach us, because our infrastructure is more complicated than they actually need.
Yeah, that's a good answer. I'm just wondering, because I found a lot of companies that are trying to bridge that gap. So you sit there, they generate tokens essentially on their mobile apps by watching ads, and then turn that into cryptocurrency, essentially making the user a generator of the cryptocurrency, and then trying to turn that around into the market. And I'm wondering if that's a trend, but it doesn't seem like that's not happening here. But that's okay. Well, it's a very interesting company. The exchange. I'm glad to see that there's companies like yours that are starting to get around compliance and starting to formalize the mechanism, starting to integrate digital securities into a way that the public can understand, because it's a very exciting space. It's a developing space, and we've got a long way to go in this space. There's a lot more money that has to be shifted around yet, and we're only in the very early stages of it. So I congratulate Stobox on this, and I wish them all the best. And I'm going to myself look into this company to see if it suits any of my own needs. It sounds very, very interesting. Have you got anything else to say about Stobox before we head off? Anything you want me to talk about, or we missed, or?
Actually, I can speak about it for hours, about the bunker level security and the general resilience approach suitable for big enterprises, about legal stuff. And so probably at this point, I would say it's enough, especially considering that it is almost 2 at night in Kiev.
Yeah, it's 2 at night in Kiev. So we'll let you get some sleep. But let's just want to quickly talk to you about liquidity. Have you had any liquidity issues, or what's up with liquidity in Stobox? Are you finding you've got enough investors to keep your assets liquid?
There are several answers to this question. One is definitely liquidity is a big question in market of digital securities, and the problem with liquidity is getting licensing for issuing financial instruments is simpler. Getting licensing for their trading on the exchange is much more complicated. For this reason, it takes time for exchanges to be established. But we expect in 2020, 2021 to have a few exchanges in Europe to get a multilateral trading facility license, such as block trade, for example, which would facilitate the liquidity pool, which would facilitate institutional investment in digital security, and definitely we will partner with them. The platform enables OTC, over-the-counter transfer of digital security. So it would be unreasonable not to allow people privately meet on the platform, privately negotiate the transfer of securities between themselves, even which is even now in the paper-based world more complicated, and this is some liquidity. But the true liquidity definitely comes on exchanges or trading facilities, and we are, as everybody else, waiting for them to emerge to offer true liquidity.
Sorry.
Yeah, and we are seeing more institutional interest in this space. We are seeing big institutions such as HSBC, for example, transferring 40% of their privately held assets worth $20 billion on the blockchain, which is an indicator of interest to these instruments in traditional financial world as well, which means that probably when the infrastructure, which is resilient and legally clear enough for big institutions to come into, we can expect for them, and we should be ready at this point to offer.
Yeah, it's huge. HSBC, that's a big one. JP Morgan, obviously with Blythe Masters moving in very early into the scene as well, even if they're holding back a little bit. Would you be worried if, because like I mentioned the interest rate before, would you be worried or would you be excited if you saw things like pension funds diving in a big way into this sort of investment?
I believe it is something that will happen at some point. Some of these investments are on average more risky. Definitely they are not as risky as ICOs and early stage startups. But if you expect returns of 7, 10, or even more %, definitely such investments are more risky. But even for pension funds, diversification of the portfolio is beneficial. And if they can invest some percentage of their asset, 10% or something like that, in digital securities, that would definitely be beneficial for their clients as well. So
yeah, so never in investing, never put all your eggs in one basket. But if a certain percentage of that portfolio wanted to flow into something like this, you wouldn't see, there would be no problem with that. Wouldn't, there's a big enough return there and a big enough risk reward ratio in order to justify it. All right, cool. Wow, Stobox looks very interesting. I wish you all the best. I will myself have a quick look at this and see what's going on. Thank you for coming in from Kiev, all the way there in the Ukraine to talk on Detonation on this very exciting venture. Digital securities is always very exciting. Cryptography, blockchain technology, Bitcoin. It's the way of the future. It's transparent. It's fast. It's verifiable. It wipes out a lot of the fraud in the banking sector and in the intergovernmental sector. So it's very exciting, and there's this thing that's going on. It's the deplatforming notion. It's going on in Facebook, where everything's sort of centralized. These centralized economies. Facebook is a centralized economy where Mark Zuckerberg is kind of like God with the power. This is the exciting thing about these decentralized economies, is that they provide a more transparent world, a fairer world, and I endorse that. I always have endorsed that. It will wipe out a lot of the underground market, which happens to be the mainstream market, which has been going on for far too long. You mentioned before there, you can just do simple accounting tricks to fudge the numbers, fudge the books, and that's what's been going on. And a lot of the economic malaise that is about to happen. I mean, look, this virus, this virus that's going around, it's rattling markets, and we've been saying that you keep interest rates too low, too long, and the markets will have nowhere to go. They're artificially being pushed up by cheap money, artificially being pushed up by liquidity. And yet they don't match the reality of the economics or the world around them. So but these markets do, and so I'm very excited for that. Thank you very much.
Thank you very much, still, for that great conversation.
Oh, no problem. Thank you very much, all the way from UK. So Mike DeVerde, you won the Thrivus gift, and everybody should go around and share that if they want another Thrivus gift. Thank you very much. That's Debt Nation putting death out of business. And thank you to all our Patreon sponsors. That's Gennady Stolyarov, David Shoemaker, and Mike DeVerde. You guys are awesome. We're heading for more Patreon supporters so we can bring you more great content like this gentleman from Kiev, Ukraine. Thank you very much, everyone, for watching Debt Nation.
Thank you.